My next question to Owais Zaidi, that with the advent of and with the advancement of AI, will we finally see the light of day where using AI, digital credit can actually go to the masses uh, uh, based on the human-like characteristics of AI, which AI platform can provide, to really scale the digital credit, which we have not been able to do till now. And another important thing, how AI algorithms really help in developing the digital credit to process the data, in a real-time environment where instant credit decisions happen. So shed some light on what before AI digital credit companies were using, and after AI how they have improved within this area.
Thank you, Khurram. So I think it's very important because Pakistan, if you look at it in terms of the formal lending, is a lending-starved society. So majority of the borrowing happens from the informal sector, which shows that the formal credit has not reached out. Whether you look at the broader segment or you look at the microfinance, both sectors are far from where they should be, and then the aggressive goals of reaching 10 million by 2020. But then it shows you that with 100 million adults which are working one way or the other, well, 10 million is the target that the sector is trying to reach by in 3 years' time. So if you look at AI, I think what it allows, and what I think Essen said in the beginning, is that it allows you to break up a problem and to become an expert as a small subset of it and do it really faster and better than a human being can. So today the reliance on technology is very limited, and majority of the lending that is happening in Pakistan is either it's very high touch if you look at the microfinance sector, and it's extremely rule based if you look at the broader commercial banking sector. So what AI will allow, and it is already allowing it, and you know, we are running and many other companies are running pilots in Pakistan and production systems in many countries in the world, is to collect all that data that is available, the traditional and the non-traditional data, which accounts for big data or massive volumes of data, and process it efficiently. So it breaks down the problem into something that technology can solve. It creates a model that allows for credit rating, and it also allows you to do it much faster. So if somebody, if you have, I'm sure everybody has Google Maps on their phone. So if you just go onto your timeline, it will tell you exactly what time of the day you were where in a particular time of a month, 6 months ago, 3 months ago. So today, if you look at verification process as one part, you assign somebody a job, then that rider goes to your office, then another rider goes to your house, and they physically verify you. But the technology today is an example which allows you to do it instantly based on all the digital footprint you're leaving. So this is just one small subset of the entire credit cycle. So if you look at the whole picture, the AI will allow you to do the same thing that you're doing in a much more efficient and faster way, in a much less time frame, or rather, as you asked, in a near real time model, and at a fraction of the cost. So yes, it will increase inclusion. It will allow more people to be able to borrow from credit and bring them to the inclusion net. And AI is probably the only way forward for the lending industry.
Okay. So let's talk about some technology impacts on the business we are doing currently, and how does this whole new digital economy actually changes the business perspective. So I will ask Owais to share his insights on, because you have a digital credit platform and you are using an AI. So do you believe that in the recent months when you have launched this, does the usage of AI in a proper way for a digital credit or any service, how does this impact on the conversation cost of the customer? Does this really help to lower that conversation cost to a traditional kind of infrastructure? Because now we are talking about human-like conversations on existing platforms. So in your view, does this technology enables organizations to really cut down on the conversation costs of the customers also? And how has your experience been since?
All right, so this is very relevant because we went live with a pilot in January, and we were, of course, we had all the industry benchmarks in terms of what is the cost of life cycle cost of a loan. So just to give you perspective, so our cost, life cycle cost of a loan is 3% compared to the industry average of 18% in the underserved segment. So that's a huge difference. So it's a multiple of 6 that we're saving. And the reason we are so cost effective and we are able to manage costs is simply because we are using these technologies very effectively. Without the AI bit, I don't think just by pure automating workflows and all, it would have been possible. You can save 10%, 15%, 30% of the cost, but AI allows you to bring the cost to a sixth of what it would ordinarily be. So this is the kind of cost impact you can look at in your everyday business when you utilize such tools effectively in the mix.